timely, insightful, discussion and analysis of economic trends and markets. From Southern California to Sacramento, featuring business and political leaders, unique field reports. From Orange County and the campus of Chapman University, this is the Chapman Business Report.
Pete Weitzner back with the boss, Esmael Adibi, and now we'll move on to the national economy. This was your assessment at your revision. There's more positives than negatives for this year and for next year. Here's your positives. You jump in where you want. Housing starts. Going to be 1 million this year nationally. Orange County going from about 2,000 at the nadir to about 10,000. Housing appreciation, I mentioned at the top, 30% in California on single-family resale. The wealth effect, which is stock market, and I'm adding corporate earnings because they've been pretty strong. Like I said, jump in where you want. Those are the big positives.
Yeah, these are huge positives.
Because housing has that good impact,
exactly.
Right?
Go back to 2007, 2008, and 9. Construction spending, both on residential and commercial, dropped each year by about 30%. And then for total of about 70%. That was a huge drag for our economy. And then 2011 and 12, while the national economy was doing good, still our construction was a huge drag, in addition to a state and local government, and even manufacturing was a little bit of a drag. What is different this time around is construction is coming back. Let's separate these. Residential versus commercial. We don't see commercial to come back
They're
strong.
Converting in Orange County. They're converting, at first I've ever seen some industrial locations, companies like Gateway that have gone out into apartments.
Yeah, because the demand is so low,
Right.
vacancy is too high, although industrial sector is doing good, office space is not doing good at all. But housing is coming back nationally. We're going to produce
Home
about
builders
1
are
million.
as optimistic as they've been in a long time.
1 million unit this year, probably 1.2 million units next year. These are national numbers. Locally, you mentioned it. We're going to almost 10,000 housing units in Orange County, 100,000 in California. And remember, one thing that people probably miss when you look at all sectors of the economy, the highest multiplier is for residential construction, not even commercial.
3
residential,
jobs per home, right?
Almost. And if you spend $1 million on a housing construction, you get another $1.5 million of activity in other sectors. And what are those sectors? Wholesalers, retailers, furniture, appliances, stores, home improvements. So it is very significant, and I think that's the biggest positive that is kicking in now.
I think you said, so we go from the increase in starts in just 2013, where we go to 1 million, it'll be 1.2 million in 2014, is the equivalent of 60 billion in economic activity for the U.S. That's 4% of GDP.
That's a little less.
About 16 trillion.
16 trillion, yeah. It's a huge number, and that's coming back. And then, as you mentioned, the wealth effect is helping. When you look at California, for example, we're creating some job, and people are generating more income, but payroll taxes have gone up, and that's a negative. Sales tax went up, it's a negative.
Okay, you jumped into the negative.
But yeah, these are negatives. But the good part is the positive wealth effect, which is improvement in the stock market and higher home prices, is making consumers feel better. I always joke, they feel a little peachy.
Sure.
And when they feel peachy, they spend a little bit more. So consumers and housing market, I think, is going to carry us through this year and next. And as job creation gains more momentum, I think we're going to even have better 2014. Okay. But, Pete, you know better than anybody else, actually you mentioned it earlier, still it is not really a robust recovery.
No. 2013, now the second revision from the conference was 2.4%. The average from a steep recession is 4%.
Yeah.
The average job growth, we're still down by 4 million.
Exactly. So, yes, we're moving in the right direction. Yes, we're gaining some momentum, but But the good news, let's give some good news. By the end of 2014, we're speaking nationally, we believe we're going to regain all the job losses that we had during this recession, which was 8.6 million jobs.
Right.
This is for the U.S. And unemployment rate is going to hit about 6.7% by the end of next year. And the Fed, you just mentioned it, they're a little bit more optimistic actually. They're thinking of 3% GDP growth, and job creation be even a little more stronger.
Real quick, among your other negatives, weak exports. You see Europe still got problems.
Yes.
China's slowing. China's got a credit bubble.
China, exactly.
And oddly enough, you said deficit reduction. Now we're getting the deficit down.
Yeah.
to 700 billion this year to 500 billion, but you say in the short term that hurts.
Yes, anytime that has been one major engine of economic activity. Now, when you withdraw it, in short term, it's going to have negative impact. In long term, all economists, they say we have to get our act together and fix the deficit and address the debt issue.
Right.
But in short term, especially how that decision is made, right now they're doing across the board, which is a bad idea. But let's say
that includes defense spending, and
Exactly.
we still have a lot of defense contractors.
If, let's say, they concentrate on defense and cut defense significantly, we have still 2 major bases in California, if it impacts bases. And then when it comes to Department of Defense contracts for development of missiles, equipment, whatever, we have lots of high technology in California. So that by itself could be a potential negative for our state.
Quick comment on jobs. So, I mean, it's part and parcel of any economic recovery, or we're doing much better than a couple of years ago. The national rate, 7.6%. The forecast, as you mentioned, by the end of next year, maybe will be in the mid-6s. We were at 8% a year ago. We were at 10% before that. But a troubling trend. There's less people that are part of the job market.
Exactly.
Whether they've retired early, given up, a big drop from 65% in 2000 to 59%. What's going on if the economy's improving?
Yeah, this is kind of actually alarming, and very many economists, including Bernanke, we are studying this. What's going on? Typically what happens during deep recession, some people get discouraged and they stay home. Your spouse has a job, you say, okay, I take a vacation for a while, or you go back to school. But what's happening now, as the economy is recovering, we like to see that labor participation to pick up. In a way, though, it's negative. Remember, if labor participation picks up, unemployment could go higher.
Sure.
Because we're not generating as many
Can
jobs.
we assume a fair amount then, or
Are discouraged workers, so sure, they're discouraged and they're sitting
they're
home.
eating in the savings, or they have some sort of government subsistence?
subsidy, or they're going to school, getting loan and getting retooled. But nonetheless, we don't want that percent of our labor force to be idle. Over long run, you want these people to be productive,
By the
produce
way,
and generate income.
sequester so far, I know it's been in effect since March, has had no impact. In fact, the jobless rate's gone down. We've gained 635,000 jobs while the government cut
because
across the board.
You know what they did? The sequestration was supposedly
Furloughs,
across the board.
yeah.
But what they did, they started shifting money as usual within department, across the department.
But it's here to stay, it
So
looks like.
there's not much of a layoff kicking in. That's
all
what we
the Chicken
anticipated.
Littles, it's here to stay.
Yeah.
Lastly, I know you don't forecast or spend much time when you forecast about consumer confidence, but what is your take that we're now at a 5-year high?
Oh, on conference board, today came out at the 5-year high. California, by the way, we do it for California. It was at 5-year high, but it showed in California a little bit of a dip. Actually, we released it just in mid-June,
right.
and we saw a little drop while confidence,
People have started to look at their paychecks and they see the higher income tax.
You know what the funny part was? One of the individuals who answered to our survey said, when am I going to be able to buy a home? So even though we love to see home prices to go up, for some people that's a negative
That
news.
32% increase
Exactly.
doesn't help if you're one of the would-be buyers being aced out by all these investors.
Exactly.